No relation, but the same name. Maybe we have to go back a few generations, Martin. But you're really welcome here today to answer one question. And this question is about the right time and when is the right time to shift my mortgage. So um, let me just start off by just say hello to everybody and tell them who you are and where you're working.
Hi, Paul. Thanks for having me on the podcast. My name is Martin Redmond. Yeah, I'm working with Kent Ashmore here in Ashmore Financial in Enniscorthy. Have been doing so now for the last 14 or 15 years now at this stage. Mortgages day in and day out. That's what I do here Monday to Friday. So yeah, that's me.
So I've got this question, I suppose, 3 or 4 times in the last 6 or 7 weeks. And there is a lot of switching going on in the country. Like people switch their phone costs, every time it's appropriate. There's always talking about switching your ESB costs and your energy costs, and people are looking at that switching of that. But the question was after me, should I switch my mortgage? And if I am to switch my mortgage, when is the right time to do it, and what is the cost of it? But like, how would you go about answering the initial question? Should I switch my mortgage? Very basic, simple question.
Yeah, you're dead right, Paul. Because car insurance and house insurance, when it's time for renewal, people ring around. Mortgage is no different. Every couple of years, maybe when a fixed rate is up, the bank will prompt you to maybe ask that question, and you get options. And as soon as you get those options, I would always say contact us. We're independent, we're a financial broker. We deal with a number of lenders across the board, so we can compare your options versus what the bank are writing out to you is.
Yeah,
But in the interim, you might not have got those fixed rate options
yeah.
or those the new options. So I would suggest pick up the phone, assess your situation, and we'll lead you. Like we'll ask you the questions to be able to answer that. But there's never a wrong time to assess your options. That's for sure.
Well, that's a great start because it's people think like when they buy the house in their home and they're there forever, and people also have this assumption that your mortgage is there forever and that you can't change. So, just you mentioned there the fixed rate. So explain what to people who don't understand, like if you're tied into a fixed rate, what that actually means.
Yes, like um, probably in the last couple of years, the most popular option for people that has been getting mortgages is either 2 year fixed or a 3 or a 5 year fixed because
Yeah,
the variable rates have been quite high. So I suppose when somebody is locked in a 2 year fixed period when they're getting their money, it will stay like that for the next 2 years.
so there's no
So
real point in switching your mortgage. You can assess it, but there's no real main point in switching your mortgage if you're in a fixed rate.
no, but I wouldn't say there's no point. It makes it less likely that you're going to switch because I suppose the shorter into that period you are, there is a breakage fee.
Yeah,
But certainly 6 to 9 months even before that fixed rate is up, you could be preparing yourself, looking at the market, assessing your options. That when that rate is available to switch, that
yeah.
you're ready to go because that's the cheapest solution. Like the quicker you can make your next choice at that point, it's
Oh,
going to
so you're
help you
getting
in the long run.
prepared for when you're coming to the end of your fixed
Absolutely.
rate mortgage, you're 6 to 8 months out, which leads me to the next question, I suppose. What is, how long does it take for the process of shifting your mortgage?
It can, like the best example to give you, we've done quite a few of these in the last couple of months, and they have been as quick as 1 month, 1.5 months. But it really does depend on how ready somebody is. So making that phone call early um, has everything prepared that you can actually possibly switch 2 weeks after your fixed rate being up. But that comes to somebody being prepared, having their options assessed, knowing what they're going to do, and being ready to do it. But sometimes people leave it till the last day and they might be going to roll onto a variable rate next week and the ring is today. What should we do? And it's still not too late, but it does put you behind in the time frames,
So
So
every part of this conversation is being prepared, being organised, talking to a professional mortgage broker like yourself, understanding what your options are, making sure that you have your information and your documentation
absolutely.
if you're going to switch. Now I know a number of people that getting their first mortgage is probably one of the most complicated things they've ever done in their life in terms of that, and the sheer stress and worry and concern over whether I can get the mortgage and all of that side of it. But this is a massive difference here because once you have your mortgage, you're switching And so I just like to alleviate some of the stress that people have on when they're talking about changing their mortgages at the right time. So what would you say to that?
Yeah, it's actually you're spot on what you said there, because the first mortgage, when someone's maybe building their house or buying their first home, they need their 10% deposit. Yeah, it's difficult. It's difficult for everybody. It's even difficult for people that work through us here. It can be difficult. But the second time, if you're switching or if you're releasing equity, it's not as difficult. It really
Yeah.
isn't. But people still remember the job the first one took. Whereas, once the paperwork is there and you know what you're doing, the reasons you're doing it for, like us assessing the options and assessing the market for you, it becomes, I won't say very simple, but it's much, much simpler than the first
It's
experience.
not near
So
as invasive or not near as
absolutely not, because you're probably
complicated.
doing the things you need to be doing. I.e., maybe you were saving before, wonder was enough savings a month. But generally
Yeah.
now, if you're paying your existing mortgage, that's a large part of what a new lender wants to see you doing
Yeah.
if you're switching.
You have the
So
history of making payments
yeah,
and that side of it.
it's not as difficult. I promise you that.
And you don't need a deposit up front to switch a mortgage.
No, absolutely not. The equity's in the house. So, that's often sometimes people wonder about that too. So somebody might have, a relatively small deposit, not enough to buy a new house, but absolutely if they have a small deposit to cover any associated costs, perhaps, they don't need to have large amount of funds to switch. If they're getting a better deal, that's
And
the main
getting
thing
a
for them.
better deal for me, I suppose, we use this acronym called PARTS when people are getting money, like the purpose of the loan. So it's the purpose of the remortgage would be to reduce the financial cost of the remortgage, to look at things like releasing a bit more equity if you want to finish off a house or
Yeah.
do something else. You know, so that's the purpose. The amount then would be, so if somebody is wanting to switch their mortgage, they can go for a lower amount or a bigger amount, and the things that affect that are things like loan to value. Just explain a little bit about that, please.
Yes, so there's a combination of things that can justify a switch as such, and it's our job, Ashmore Financial here, to find that switch for you.
Yeah.
Okay, like somebody's energy rating of their house, if it's A or B, there's maybe green rates out now that wasn't out when the mortgage was initially took out. They make a difference and an impact on the rate. Loan to value is a big one. Not all lenders reward you for a lower loan to value rate. So that's where you owe a certain amount of money versus the value of your house. So obviously, maybe in 10 years ago, somebody would have took out a mortgage with us or directly with the bank. They owe an awful lot less now than they did 10 years ago, and their value of their house has gone up. So it's that loan to value ratio can sometimes find them actually getting a better rate out there. And that's all what comes in on when we're assessing somebody's situation. Like we ask the questions like, what's the balance on your mortgage? What's the energy rating of your house? Approximately what's the value? And we use our systems then and our to work the figures, and then we can compare what you're being offered or what you're on versus what's out there for you. And that's where we recommend switching or maybe not. But that's how
Well,
we
I'm
do it.
always of the opinion that you should use an independent broker because you have access to the whole of the market that's operational in Ireland to do with your mortgage. And so people, while people can go into their own normal bank that their current lender, they're not necessarily, they might get a deal with their current lender, but they're not necessarily going to get the most perfect deal with their current lender because do the banks change the offers on a fairly regular basis?
They don't really, Paul, but sometimes, and I don't know whether it's right or wrong. I've no real opinion on it, but sometimes new business gets some preferential rates than existing business.
Yeah.
I'm going to sit in the sideline if that's right or wrong, but
I think you
new
believe
business,
it's wrong, but anyway, I'm just
yeah, new
assessing.
business kind of seems. I've had people here in the last couple of years looking at a rate, and it's, for example, 3.45. But if I'm looking, if there's a new customer coming to me as a first time buyer, they're getting maybe 3.4, and you know, it's new business rates. And I suppose
Well,
that,
you have a customer for a longer period of time. If you get a mortgage in, like you're looking at a minimum of
yeah,
15 years to up to 30 years. So the bank are obviously going to make a lot more money on somebody with a longer term mortgage in it. So the offers are there. But there is a fairly stable market in terms of mortgages. Is there any new entrants coming into the market, or is it just the traditional
it's
banking
the
that are
traditional
there?
lenders at the moment still, Paul. There is some kind of quirkier ones there, but you know what? I'll just give you one example. Like, if like when we sort on our system the rates from lowest to highest and what's out there on certain scenarios, there is a quirky lender out there that's quite new, but the lowest rate is on a variable option. So
Yeah.
you mix that into our advice. Okay, there is technically a lower rate out there, but in a month's time, when that lender picks up a few new customers, that variable rate could shoot up because they've got you in, and then so there's no real dependability on that. So the traditional lenders are still core, but there's a good few of them, so that kind of gives you a good choice there.
Yeah. So yeah, you really need to focus in on. You need to focus in. It's 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 not just like switching your electricity costs, but it is relatively simple thing to do, and it is a really important long-term benefit because if you switched your mortgage to a different lender and say you were on a variable rate and the rate dropped down, I mean, one of the best things that I've learned from yourself is, overpaying your variable rate mortgage will buy you back massive amounts of months, in the industry. So your own budgeting might still be able to hold a higher payment on a variable rate, which will massively pay back the time. So if you have a 30-year mortgage, you could bring it back down to 25 or maybe 20 years.
Yeah,
So
you can
the
manage it.
idea of speaking to somebody like yourself who has all of this expertise is really important because it's those little tricks and it's the little things that are able to really make it worthwhile sitting down and have a conversation with you. But the other question I have is like, what does it cost to change the mortgage like? I mean, what's the fees for yourselves like?
Um, well, again, what I was just about to say to you first is, for somebody that's wondering, should I stick or should I switch? The first thing to do is assess your options. Doesn't cost you anything.
So
Absolutely not.
initial assessment. So the idea is sit down, have an initial assessment, and if somebody wants to have initial assessment, the details for Ashmore Financial and your details will be posted in the link to this as well, so they'll be able to talk to you. So there is a no cost initial conversation that somebody have, and I think that's always to be the first step.
Yeah,
Do you know what I mean? Because at least then, if you're looking at it, and even if you're going into a fixed rate mortgage today, understanding that your option in
yeah.
4 years and 3 months or whatever it is, that you can actually relook at this again. So you're only budgeting for that shorter period of time is something that's really, really important.
Yeah, no, I always say, like, assess your options. We'll give you like a view over 2 years, 3 years, 5 years. If you stay, this is kind of what it will cost you. If you switch, this is what it'll cost you. And you know what? You can weigh up kind of the saving. Is it worth the saving? Is it not worth the saving? But yeah, you factor in associated costs such as our fees, a valuation if it's needed, a solicitor, getting back the deeds, etc. But that's kind of it really in terms of associated costs. So, but you wouldn't go into it blindly. You would assess the costs versus potential saving, and that's how you make your decision.
And the idea, like, the idea of this being done just to save money is not necessarily the be all and end all. It's a full assessment on your mortgage, what's there, the loan to value, whether you need extra cash, whether you want to come in and the other option is you might have a lump of money and you're looking to switch your mortgage and you want
Yeah.
to pay down a chunk of it. So you're coming in with more money, which is massively going to
Yeah,
reduce the costs.
like an example there from actually just last week on one that drew down. We had a guy that had X amount left on his mortgage. He ended up switching lender. He got a better rate. There was cash back involved from that certain bank that kind of tied it over and eliminated the
Costs.
associated costs. And yeah, he wanted to borrow an extra 10, 15 to do to make his house into an aerated house, to do solar panels, etc. So that's actually going to cheapen the cost of the living of his house. So it was the perfect
And it
combination.
makes it the
So
green, you get the green rate or whatever is
exactly,
available.
and he was benefiting. So, and from day to day, then the running of his house was obviously cheaper. So it's never just only a potential switch. We do them, but potential switch with equity release, whether it's to put up a garage outside, whether it's to do the driveway. There's so much more to possibly switching as well.
Well, I just want to say thank you so much. You're an absolute natural on this thing. It's a one question live videos about mortgage switching, but I think it's really prevalent in times where everybody is looking at cost savings wherever they can, and they really should have consider this for their home mortgage. They really should understand what they're getting into. They need to understand the cost of it. But having an initial conversation and initial assessment is really, really important. So I presume on the Ashmore website they can contact you there as well.
Yeah,
And if you want to call out the phone number that people can call to you and your email address, you can just call it out here as well.
yeah, we're on 053 92433390. Or my email address personally is martin at ashmorefs.ie. We have a website, or we're active. We're trying to get more active on Facebook, but there's a bit about us on Facebook as well. So yeah, that's where we are, Paul.
Thank you so much. And really, really well done. And I really enjoyed the chat. Thanks, Martin.
Thanks, Paul. All the best.